Money was supposed to make us free. Free to trade, free to save, free to plan the future. So here is the mystery. Why does a world with more money than ever feel less free than before? Why do people work harder, earn more digits on screens, yet feel permanently behind? Why do governments talk about economic necessity as if there are no real choices left? What if currency stopped being a tool of exchange and quietly became a tool of control? Tonight, we trace the moment freedom was priced out and how a hidden financial agreement locked governments and citizens into permanent dependence. Setting the stage, the promise of money for most of history. Money had limits. Gold, silver, grain money represented something real and scarce. You couldn't create it without effort, and you couldn't control it without restraint. Because of those limits, money also preserved freedom. You could leave, you could save, you could opt out. But modern currency is different. It doesn't restrain power, it extends it. And the shift didn't happen overnight. It unfolded quietly, step by step, until currency became something else entirely. Orgies. When money left reality, the transformation began when states discovered debt. Borrowing allowed rulers to spend without immediate consent. Central banks institutionalized this power, separating money creation from physical limits. But the real turning point came when currencies severed their link to tangible backing. Once money no longer represented something scarce, it could represent policy. From that moment, currency stopped measuring value and started enforcing behavior. Interest rates could reward borrowing or punish saving. Inflation could erase debt or confiscate purchasing power. Credit access could decide who participates and who doesn't. Money became programmable. The RISE currency as leverage. As financial systems matured, a silent agreement took shape. Governments would issue currency and debt. Banks would distribute it. Central institutions would stabilize it when things went wrong. In return, growth would depend on participation. To live normally, you had to borrow. To compete, you had to leverage. To survive, you had to stay inside the system. Freedom didn't disappear. It became conditional. The breaking point when choice vanished. Every control system eventually reaches a point where compliance is no longer optional. For currency, that moment came when debt became permanent. Governments stopped talking about repayment and started talking about sustainability. Individuals stopped saving and started refinancing. At the breaking point, inflation revealed the truth. Inflation isn't just rising prices. It's declining freedom. It tells you where you can live, where you can afford, and how long you must work to stay afloat. Currency didn't fail. It succeeded at enforcing limits without force. Fallout. The price of controlled money. The fallout isn't dramatic collapse. It's quiet compression. Wages lag behind prices. Assets inflate beyond reach. Debt becomes a requirement, not a choice. Governments lose policy freedom as interest payments dominate budgets. Citizens lose mobility as savings lose meaning. The system survives, but freedom becomes expensive, and most people are priced out. Failed fixes. Why reform never restores freedom? Every crisis brings the same promises: monetary reform, better regulation, fairer markets. But these fixes leave the core untouched. You can't restore freedom with a currency system designed to discipline behavior. You can't fix dependency using tools that require dependence to function. Even when reforms succeed, they reinforce the same architecture, just with new language. Modern parallels. The pattern today. Look around. Global debt is at historic highs. Central banks manage markets daily. Emergency measures never fully end. Entire generations delay milestones because currency no longer represents stored value. It represents ongoing obligation. This isn't accidental. It's the predictable outcome of a system built to survive crises, not eliminate it. The hidden agreement. Control without force. The secret agreement is simple. Currency will be elastic. Debt will be permanent. Freedom will be conditional. Governments stay solvent. Institutions stay powerful. Citizens adapt or file bend. No violence required. No declaration needed. Control flows through currency itself. 3 takeaways. What this reveals: first, Money stopped being neutral the moment it became unlimited. Second, currency controls behavior more effectively than laws. Third, a system designed to survive crises will always prioritize control over freedom. Warning: the long view of society that prices freedom will eventually ration it. The danger isn't hyperinflation or collapse. It's normalization where permanent constraint feels natural, where people stop asking what money's for and only ask how to get more of it. Open-ended thought. If currency defines the boundaries of your choices, is it still money?